Good morning, everybody, and welcome to the morning volatility report. Well, actually, Tim, it's putting things. I want some of the trades. We got to put more on. Not necessarily. We're getting better at taking them off, though. Well, this is welcome to our chat room, everybody. This is a morning volatility report with Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. Welcoming you to our morning vol report, and it seems like we have a little bit of it. But events, really what's important, our Saturday event, if you're an Option Pit subscriber, already it's free. It's free. It's $150 value, free every Saturday. If you add up all our Saturday classes, if you're a gold, if you're Option Pit Live or higher, you actually get, you almost get twice what you pay for as far as content goes for our yearly Option Pit subscribers. So check us out. This will be on interest rates. It will be how interest rates affect stocks and options. I will do kind of the beginning of it on the basics, and then Mark will be covering pieces at the end as far as more strategies and some of the more interest rate sensitive stuff. All right, that will be 9:30 Eastern, starts Saturday, and also. You'll be seeing a note from us soon on our volatility trading course. It'll be a 10-part course, and I've got a sneak peek of what it will be here, right? So this will be essentially the topics. This is stuff you're gonna learn. So you're gonna learn to trade volatility as opposed to, let's say, just trading purely direction. You're gonna understand how realized vol works, learning how to pick the right term and using Vega as an actual asset, optimizing short-term decay, usually in the weeklies and dailies that are listed now. You're gonna know how VIX and the fixed futures work, how to price them out of backwardation and contango. You're going to learn to select trade properly versus realized vol. How VIX options work and when the best time to use them. Also, how to understand and trade all the good vol products that are kind of useful. And lastly, how to portfolio hedge using SPY and volatility. You're going to learn a ton of stuff. Every class you'll have a takeaway of what to trade, how to trade. So that will be starting January 17th. I'm teaching it, and Mark might teach one or two, but I think most of it will be me. It'll be Tuesday evenings at 8 p.m., about an hour per class for 10 weeks. That will be the vol class. Now, let's get, speaking of vol, take a look at this. Let's look at our 5-day, let's say 2-day chart. And let's see VIX here. Okay, 2-day. Okay. Alrighty, let's actually do 5-day. This is a good. So, what do we have? Whoopsie. So, what do we got going on? So yesterday we were in a chat room and we were noticing volatility in the term had gotten to ridiculously low levels. Actually, it's hard to say this, but it got so cheap that it was hard to get cheaper than it was, at least on a weekly basis. I think we started looking at that in our chat room right around here. It was timely because from then vol just went straight back up again. Why did that happen? Well, from a VIX point of view, VIX is a function of the S&P 500, and when the SPX is only moving, 25 basis points a day, or $2.50 for the SPX, or $4 a day, it's generating really low realized vol. So if you notice, VIX started to ramp up right when, the SPX started to ramp up, and what happens is liquidity providers are just dragging the implied volatility up because you don't want to sell 8% at the money vol when the market's moving at 1%, right? So even with the market slightly down today, what you're gonna notice if this holds, you're gonna should see implied volatility start to creep down a little bit. We're gonna look at some downside flies in our chat room today, anywhere near the money, but maybe downside. I think this jump in vol opened up a little opportunity. Okay, it opened up a bigger opportunity in the weeklies. It opened up a small opportunity from here, right? You saw 8.5 vol at 30-day, ridiculously low, right? Ridiculously low. Gap to 10, right? The midterm vol didn't do much, a little bit up, again, and a little bit up, just basically based on the move we had in the S&P 500. It was a darn big move for not a lot happening. So implied volatility went up with it. So nothing crazy there. What is starting, Draghi is going to push through with QE. That's pushing the euro down. I think that was a little bit of a surprise as of right now. I think it's just a little bit of a surprise. The U.S. is basically abandoning it as for right now, and the Europeans seem to think it's going to keep working. So I guess they're going to keep doing that. Could add a little instability. What it is doing is it's crushing the TLT. This was a trade that we have on the strategy that will probably be able to take off today. Because here rates are going up. Rates are going up, and that's pushing bonds lower. So those, that's enough to give the volatility a little kick. But we've had such a huge rally, it's hard to believe that it can keep going. Doesn't mean it can't, but it was a pretty massive rally yesterday. So we're going to look for more like near-term time spreads, flies, and the indexes probably we'll focus on today. There's still, I think the Qs are still catching up to the rest of the market. So if you want to catch up somewhere, that's still not a bad place to be. As far as the volatility products go, the futures are starting to back up a little bit or go back up, which is probably setting up. I'm just saying it's probably setting up for another short for the vol products. You've got the Fed coming out. I don't think much is going to happen, and right now there's a dead cat bounce in the futures. We got a lift in the underlying VIX. The futures are going with it, but there is still a ton of decay in those products. So while right now it's going up, if the market continues to do what it's doing, which right now is just flatlining, it's going to be hard for the vol products to maintain this level. So for us, we'll try to close some short puts we have in them and move into something maybe a little more aggressive about just shorting the vol. And with that, I will see all of you in the pit report. We'll see you Saturday, and you all have a fine